Hello traders, the title of the video is a simple Fibonacci retracement, a moving average 200 trading tips that work one dash. Alright, so we want to go straight away to the point. What are we looking for? We want a financial instrument, alright, to go out from point A to point B, and then to pull back to the sweet spot Fibonacci trading zone. If you do not know what is a sweet spot Fibonacci trading zone, check the description section. There is a link there that will bring you to a sweet spot Fibonacci trading zone at Dayprotraders.com. So price goes out from point A to point B. That's what we are looking for, a bullish move. Now from A to B, I want to put on my chart point B, and then you pull back to point C. But most importantly, the point C is also the sweet spot zone, which is the between the 50% and the 61.8% Fibonacci retracement of that prior bullish move. All right. So all those conditions must be fulfilled first before we will go to the next one. All right. So after that, all right, so if that condition is fulfilled, all right, if the price form, okay, a higher low, very important. After that, that higher low is a high probability trading setup. This is where we want to look for an opportunity, okay, to buy the financial instrument in an uptrend. Very, very powerful point to buy. Financial instrument was trending fast, and then you pull back to the sweet spot Fibonacci zone between the 50% 61.8% level. Now if we see after this low here a higher low, meaning that this common central line here is broken, and the price is at a key level, because a higher low should be at a key level, right? We will implement a different time frame trading method to buy. So this is exactly what has happened here for this financial instrument. AOS, Alpha Oscar Sierra, AO Smith Corporation. You can see that the price, trust me on that, because you cannot see clearly here, trust me. You see all this move up, and then you pull back. Okay, first line 38.2, second line dotted line is 50%, third line is 61.8% level. So between the 50% and 61.8% level, I cannot zoom into it more. Or I say between the 50 and the 61.8. That's the first condition. There was an up move to a certain level from A to B. All right, A to B. Now it pulled back to the sweet spot zone. What are we looking for? We are looking for the next immediate, okay, higher low. After that, here it is what we are talking about, and then the common central line is broken. We will implement a top-down trading method to trade it. It's a powerful, okay, trading setup, a high probability trading setup. So anytime I use the word high probability trading setup, it means that you have more chances, okay, to have a winning trade instead of losing trade if you do everything correctly, meaning that you follow the trading drill and implement a top-down trading method. It doesn't mean that one cannot lose, but one has more chance to win than to lose. That's the whole point. But one must always control the risk using a top-down trading method. This is what has happened here. Alright, so this is a very simple Fibonacci retracement, a moving average 200 trading tips. So you may say, Joe, where is the moving average 200? Is the blue line here. So one thing that I did not mention is that sweet spot zone, at the time when the price is at the sweet spot zone, the next condition that we want is that the price should be also retesting the moving average 200. So what I'm going to put on my chart now as a dark green, that's the moving average 200. MB 200. So it's not sufficient this very important point, it's not sufficient for the price to be at a sweet spot zone. At the time when the price is at a sweet spot zone, we want it also to be retesting the moving average 200, the simple moving average 200. So we are looking, so to summarize this tutorial, a bullish move up, first condition, a pullback to the sweet spot zone, very important, a retest or the moving average 200 at that sweet spot zone. Now we go to the next step, looking for the first immediate higher low. After the common straight line is coupled, we implement a top-down trading method to trade it. So you must also have the moving average 200 in your chart. You may say to me, George, I dislike the moving average 200. I describe moving average in general because you just get whipsaw. I will say to you, go to George Trio YouTube channel. And there is a video I recorded yesterday talking about how to avoid moving averages, okay, whipsaw. So that will help you to make peace, so to speak, with a moving averages. All right, okay. Check that video at George Trio, George like George Washington. All right, George Trio YouTube channel. I'm looking for the title of the video. Something about how to avoid moving averages whipsaw. Right. So those are the themes, simple Fibonacci trading themes. Remember everything clearly. Uptrend, pullback to spot zone, price retesting, the moving of the simple moving at 200. Now we want to see a higher low. See here, higher low, very often near the 50, moving at 50, but I don't want to talk about 50. All right. A higher low should be at a key level. So you want to, whenever you see a higher low and you want to buy, check whether it's at a key level. You see this one? It's at a key level. You see here. It breaks above those resistances and was retesting it. If it's at the wrong place, be careful. The opposite is also true in a downtrend. What are we looking for? So in a downtrend, we say price was trending down first, from A to B. And then it rally up to the sweet spot Fibonacci trading zone. All right. Where are we? So, and then it formed a lower high. The first lower high after. So you see this is the movement of 200. We put it somewhere here. Color it now into red. So price was going down from A to B. Then it rallied up to the sweet spot zone. What is the sweet spot zone? Between the 50% and the 61.8% Fibonacci retracement of the prior move down. All right, so that's the sweet spot zone. But we want it also to retest the moving average 200. After that, if the price form a new lower high at the key level, you want to verify that, and the common certain line here is coupled, we will look for an opportunity to sell it. All right, so let me know how you find it. As always, if you learn something new for the first time, use a demo account, practice, until you master it. I have a warning for new traders. Don't go on a 10-minute, 5-minute, play with this, and then you end up losing and come back and mark it down. Don't do that. The best approach, as I was telling you, when we see that higher low or that lower high, after the 4 verification, we will implement a different time frame trading method. So if you are a new trader and you don't know what is a different time frame trading method, you to search different time frame trading method, or in fact you to search top-down trading method, all right, by 2-4 stock trader YouTube channel, digit 2, digit 4 stock trader YouTube channel, and you see 4 videos or where I'm explaining to trader what is top-down trading method, so you also can learn about it. All right. So don't go on a 50-minute time frame just doing this. Sometimes it may work, sometimes it may not work. The best approach, like I'm the monthly chart. If you were here, okay, that's your trading setup. You go on a daily chart. At that point in time, the price retesting that point. That candlestick block on the monthly chart must close, or at least one bullish candlestick bar popping above that common center line. See this one. Close above it nicely. All right. Now after that, you go to the daily chart, waiting for a clear cut signal, draw channel, break a bow, retest on the daily chart will constitute a kind of signal or a bullish chart pattern. And then from there, you go to the hourly time frame to enter the trade. You say, George, are you out of your mind? I will never enter my trade on the hourly time frame. Then you will drop down to the 10-minute time frame from the hourly time frame. All right? So don't just scalp trade doing all kind of things on a 30-minute time frame. Say, oh, this is not working. I've done those kind of mistakes before. I know that some trader will do exactly that. That's not how you trade. All right? That's not how you trade. You want to apply the trading drill, any trading method that people talk about on YouTube. I remember years ago, people were using multiple stochastic. Do you know about that? So they will use a short-term stochastic, and then they will put on the same panel long-term stochastic, and people will play with it. And now it's a trading method, but it's about technical indicators. I played with that. I lost a lot of money, but I was blaming people when I was using that time. But it's just because I did not know how to apply the trading drill and do things properly. So this is why we are recording this video, to explain to traders, trading is risky, but one should give it a time. We learn something. Don't use real money straight away. Now, use a demo account, gain some experience. Do you like it? That's the bottom line. Okay, is it working? Good. Then go with it. Otherwise, keep your money in your bank until you are ready. You purchase TSCW24 SY008 24SP. The first 14 days, practice, ask questions, understanding, master it before you put money on it. Instead of buying a system, you pay for it. Now you trade for it, you haven't mastered it yet, then you lose money again. It's not the best way forward. So this will conclude our discussion today about a simple Fibonacci retracement and moving average 200 trading tips and tricks that work wonders. Let me know if this is working wonders for you or not. So we can use it on a 4-hour time frame and then break it down 4-hour time frame, 15-minute time frame, okay, 3-minute time frame. All right, we can go daily chart, hourly time frame, 10-minute time frame. We can go weekly chart, 2-hour time frame or 4-hour time frame, 15-minute time frame. We can use it on the monthly chart, daily chart, hourly time frame for swing trading. We can go even for position trading by going yearly chart, okay, monthly chart and daily chart, and so on and so on. Right? So this will conclude our discussion today about a simple Fibonacci. All right. Simple Fibonacci retracement and moving average 200 trading tips and tricks that way. So this is a high probability trading setup. Now master it, understand it, and use it. Put it in your golden portfolio, golden trading strategy, okay, list. So you are looking for the same setup quite often, especially on the monthly chart like this. All right, and so on and so on. Happy trading to you all. And I will speak to you soon. So if this video has been truly useful to you, please let us know by sticking your beautiful thumbs up. If you dislike it, please mark it down. If you think this is an essential tutorial that can help other traders, okay, feel free to share it on Tumblr, Google+, Twitter, Facebook. All right. If you have not yet subscribed to our channel, please subscribe to our channel. It is free. All right. We will be recording more amazing tutorials. And be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSCW24 traders talking about simple Fibonacci retracement and moving average 200 trading tips that work wonders. What is wonders? Working wonders? Is it miracles? Okay, we want to hear from you, your comments, your suggestion in the comments section. Happy trading to you all, and I will speak to you soon. Thank you for watching.